part of the modern economy. It is the lifeblood of the in all our country. It is the backbone of the every organization and every trade of the every trade. The idea of banking evolved with the idea of money, and it's linked with the lending. Money lender is the biggest source of backbone of the every organization and found in the every society. The nature and the functions of modern banks have evolved over a long period of time. Even it is evidence that the banking system was prevailing at the time of Babylon culture. So I can move on to the next slide. It means commercial bank. Meaning of commercial bank. A commercial bank is a financial institution which performs the functions of accepting deposits from the general public and giving loans for investment with the aim of earning profit. What are all the examples of commercial bank? The first one, it is Andhra Bank, Bank of Baroda and Bank of India. The next one, it is the functions of commercial bank. There are two main functions of commercial bank. One is primary function and second one is secondary function. Under primary function, accept deposits. The most important function of commercial bank is accepting deposit from the individual in the form of current account, savings bank account, fixed deposit account. See, it collects the surplus balances of the individuals and also firms also. The main task is to cultivate the savings of the every individual or every public. The bank that accepting deposit from its customers, it is the lifeline of banks. There are three types of deposits are there. One is current account. Current account, it is eligible to open only for that is business people and entrepreneur only. They can open the current account. Here in this account, the people can open account because of their business purpose only. These can be withdrawn by the depositor any number of time depending upon the balance in the account. The bank does not pay any interest on these deposit. There is no interest rate for this kind of deposit account. So bank can provide the check facilities also. It can be maintained or the payment of large amount of money through these checks only. Fixed deposit, it also called the time deposit. Fixed deposit have a fixed time period and maturity period also there. It starts from 15 days to that is n number of years. So after the maturity period, after the specified maturity period only, the customers can get the money with interest also. So here it is the higher rate of interest is provided by the banking institution. They are not treated as a part of money supply. The next one is savings bank account. The main aim of savings bank account to cultivate or motivate to save in the society. That every people to do the saving habit. The savings account is most suitable for individuals, not only individual, for all the organization and also firms also, so they can able to save in their surplus amount. So it is the combination of both current account and the fixed deposit account features. They are payable on demand and also withdrawal able to by way of check and other kind of transaction purposes. Some kind of restriction is provided by the bank to the savings bank account holder. For example, bank may allow 4 or 5 checks time for each day, or maybe it is different from the bank to bank. The interest paid on deposits for this kind of deposit is lesser than that of the fixed deposit. Loans and advances. The next function is loans and advances. This is the major function of the commercial bank. It can be the bank can be give the loans and advances to the business people. So not only for purpose of business people, they can give the loans to the entrepreneurs also. What is the main aim of having a that is giving a loans and advances? To get the benefit from the what the entrepreneurs and businessmen also, not only for bankers, you say in the side of business people and entrepreneurs also. The bank keeps a certain portion of the deposit itself and gives the balance to the borrower. The loans and advances may be in the form of cash credit, demand loans, short-run loans and overdraft. Going to discuss about cash credit. An eligible borrower is first sanctioned a credit limit, and within the limit he is allowed to withdraw a certain amount on a given security. The withdrawing power depends upon the borrower's current asset, the stock statement of which is submitted by him to the bank as the basis of security. The interest is charged by the bank on the drawn or utilized portion of the credit. The next one, it is demand loans. A loan which can be recalled on demand is called demand loan. There is a no stated maturity. The entire loan amount is paid in lump sum by crediting into the loan account of the borrower. Those like security brokers whose credit needs fluctuate generally take such loans on a personal security and financial asset. And short-term loans, it means that is short term, minimum 1 year or 2 years or 3 years only. It may be it kind of personal loans to finance. It can be catering the working capital and the priority sector advances. The entire amount is repaid either in one installment or maybe a number of installment or a period of time. Next one, it is the secondary function. See, already we are discussed about primary function. Secondary, now we are going to discuss about the secondary function. The first one is discounting of bill of exchange. What do you mean by bill of exchange? Bill of exchange, it is a document. So they can buyer and seller, they can enter into an agreement and they have to sign in the agreement. They have to fix at the time period also, and they can mention the lump sum also there. So it is the time period is only 3 months. Now all the bill of exchange, all the instrument, it is only the time period is 3 months time period. Here it is, if there is any need of money for within this 3 months period, buyer or seller, they can pledge their a resource that is document in the bank, and they can get the money from the bank. It can be utilized for the their business purposes. So this is the main functions of the banking. So it is a paper document. The debtor or creditor, buyer or seller, exporter or importer, they can sign in their document. The sign, it is a very mandatory for their document. Next one, it is overdraft facility. Overdraft is an advantage. It is given by allowing a customer to keeping in a current account to overdraft his current account up to an agreed limit. It is a facility to a depositor for overdrawing the amount than the balance amount in his account. In other words, depositors of current account make arrangement with the banks that in the case a check has been drawn by them which are not covered by the deposit, then the bank should grant overdraft and honor the check. The security for overdraft is generally financial assets like shares, debentures, life insurance policies of the account holder. So mainly this type of overdraft facilities is given to the only to current account holders. Here it is agreed limit also, it is fixed. Suppose it is over the agreed limit, so that time only the bank can able to get the interest rates from the current account holders. Then agency functions of the bank. See, these in a previous slides we can discuss about the overdraft facilities. Now it is the agency function of the bank. There are three functions of agency function. One is transfer of funds. It providing facilities to the cheap and easy remittance of funds from one place to another place through demand draft, that is DD, mail transfers and telegraphic transfers. Then second one, collection of funds on behalf of customer, on behalf of customer only, so they can collect check, bills and demand draft. Then payment of various items. Here also on behalf of customers, they can pay the payment of taxes, insurance premium, bills, etc. Then next topic is credit creation. Credit creation is a situation in which banks makes more loans to consumer and business. With the result of that, the amount of money in circulating increases. In other words, it refers to the unique power of the banks to multiply loans and advances and hence deposit. The purpose is to cultivate, to increase their that is amount. How the banks are increasing their amount? See, this is the next slides. I can discuss about the process of money creation or process of credit creation. See, for example, I'm giving 100 rupees to the bank. The bank, firstly, the bank has to keep 10 percentage, like 90 percentage, like 90 rupees. So they can distribute to the outsider 10 percentage. They can keep it there for their future purposes. Again, another bank, again they can keep it at the same 10 percentage, like 10 rupees. Again it is 80 rupees, they can be distributed to the other banks also. This is the way the banks also creating a money. See, for the purpose of only, so they can distribute loan and other kind of facilities to the consumer. Then only they can avail the money transaction and flotation of money. So no, then only the monetary improvement, that the monetary development also, so they can develop. And same times economic development also prevailing in the country. The next one, it is methods of credit control. The methods of credit control, it is done by our RBI, Reserve Bank of India. So how to control? Why it is needed for this timing? It is always it's needed for our economic development. Without credit control, we cannot able to sustain the environment or the economic development. Here, methods of credit control. There are two methods of credit control is there. One is quantitative, another one is qualitative method. The first, I can discuss about the quantitative methods. Bank rate. Bank rate, it means central banks, they can provide the loans to the commercial bank. That time the central bank is giving a one interest rate. So that interest rate is called bank rate, and otherwise it is called discount rate. The discount rate or bank rate, it is linked to the market rate of interest. Suppose increase in bank rate leads to an increase in other rates of interest. Alternatively, a decrease in bank rate, again it is a decrease in a market rate of interest. The manipulation of bank rate by the only by the central bank to influence the flow of credit created by the commercial bank, it is called bank rate policy. It does by the affecting the demand for credit and the cost of credit and the availability of credit. Then open market operation. This is also one of the credit controlling methods of RBI. Open market operation. Open market operation, it is refers to sale and purchase of securities by the central bank only. They can do this kind of operation by the central bank to the commercial banks. A sale of securities by the central bank, that is the purchase of securities by the commercial bank, result in fall in the total cash resources. A fall in total cash resources, it's lead to a cut in the credit creation power of commercial banks. Then, with reduced cash resources at their command, the commercial banks can only create lower volume of credit. Sale of securities by the central bank serves an anti-inflationary measure of control. Likewise, a purchase of securities by the central bank result in more cash flowing to the commercial bank. So that time, so they can increasing their able to increasing the able of giving a loans and advances to the consumer. Here also they can control the anti deflationary control and increasing their economic development. And variable reserve ratios. Variable reserve ratios, it is refers to that proportion of bank deposits that the commercial banks are required to keep in the form of cash to ensure the liquidity for the credit created by them. The raise in the cash resource ratio result in fall in the volume of the depositor multiplier. Alternatively, a fall in the deposit multiplier amounts to a contraction in the availability of credit, and thus it may serve as an anti-inflationary measure. There are two kind of anti-inflationary measures are there. One is a statutory liquidity ratio and cash reserve ratio. SLR. What do you mean by SLR? Is the money of a commercial bank needs to preserve in the form of cash, gold, or government authorized security like bonds before providing the credit to their own customer. SLR rate is decided by the RBI as well as to control the expansion of credit control. Then SLR is issued to control the bank leverage for credit expansion. Cash reserve ratio. It is specified a minimum fraction of total deposit of customers, which commercial bank have to serve either in cash or as deposits with the central bank. CRR is the set according to the guidance of the central bank of a country. What is the difference between CRR and SLR? CRR is the percentage of money which a bank has to keep with RBA in the form of cash. On the other hand, SLR is the proportion of liquid asset to time and demand liabilities. CRR regulates the flow of money in the economy, whereas SLR ensures the solvency of the banks. Qualitative method. The first method is margin requirement. Changes in margin requirements also designed to influence the flow of credit against the specific commodities. The commercial bank generally advance loans to their customers against some securities offered by the borrower and acceptable to banks. More generally, the commercial banks do not lend up the full amount of security but lend an amount less than its value. The margin requirement against some specific securities determined by the central bank. A change in margin requirement will influence the flow of credit. Raise in margin requirement result in contraction in the borrowing value of the security. So this is based on the some margin. It is fixed by the that is fixed by the central bank. It is based on the availability of a flow of money movement in the or in the economy, or some kind of flotation of money in the overall internationally. Based on this only they can fix the some margin. Similarly, fall in the margin requirement result in expansion in the borrowing value of the security. Based on this only the commercial bank will give the loans and advances to the required people. Credit rationing. Rationing of credit is a method by which a central bank seeks to limit the maximum amount of loans and advances, fixing some maximum amount of loan. It also some certain cases fix ceiling for specific categories of loans and advances. Some they have to containing their loans and advances. Suppose in a some kind of pandemic period or some kind of any vulnerable time period, so they can given a loan only a limited amount of people and limited amount of loan amount only. This is called credit rationing. Regulation of consumer credit. Regulation of consumer credit is designed to check the flow of credit for consumer durable goods only. This can be done by regulating the total volume of credit that may be extended for purchasing durable good, and regulating the number of installments through which the loan can be spread. Central bank uses this method to restrict or liberalize loan condition accordingly to stabilize the economy. Then moral suasion, another method of credit control. It is a credit monitoring arrangement or other methods of credit control. The policy of moral suasion will succeed only if the central bank is strong enough to influence the commercial bank. In India, from 1949 onwards, the Reserve Bank of India has been successful in using the method of moral suasion to bring the commercial bank to fall in the line with its policies regarding credit. Publicity is another method whereby the Reserve Bank to direct appeal to public and publishes the data which will have sobering the effect on their banks and their commercial bank circulars. Then next one that is important topic is central bank. Here in India, we are call it is called Reserve Bank of India. This is the symbol of Reserve Bank of India. Here, so I can give the what definition for central bank or RBI. According to Samuelson, every central bank has one function. It operates to control economy, supply of money and credit. Another example, another definition for Reserve Bank of India, according to Bank of International Settlement, a central bank is a bank in any country to which has been entrusted the duty of regulating the volume of currency and credit in that country. The next slide is functions of central bank. There are two main functions. One is traditional function, another one is developmental function. In under traditional function, important function is bank of issue. See here, it is an exclusively all the central bank in our world. So they are doing the very important function is issue of banks. In a previously, the that is government is giving a power to do the note issue to the all kind of banking, all kind of banking like private banking and what public banking also. See when and that time it is a very problematic when it leads to number of problems such as notes were over issued and currency system becomes disorganized. So after that, the government of different countries authorized to central bank to issue notes. They can give a common arrangement. So all the central banks in our each and every countries, they can able to. They are the only responsible people. They can do their this only function, only one function. It is called issue of currency notes. The issue of currency note by one bank has led to uniformity in the note circulation and a balance in the money supply. This is the very important functions of the Reserve Bank of India or Central Bank of India. Then second function is government banker, agent and advisor. It is implies that the central bank performs different function for the government. As a banker, the central bank performs banking function for the government and granting loans to the government. As an agent, the central bank manages the public debt, undertakes the payment of interest on this debt, and provide all other services related to the debit. As an advisor, the central bank gives advice to the government regarding economic policy matters, money market, capital market, and government loans. Apart from this, the central bank formulates and implements fiscal and monetary policies. Then next function is custodian of cash resources of commercial bank. Already we are discussed about this like a CRR and SLR. So here also the same meaning also there. Custodian of cash resources takes care of the cash resources of commercial bank. Commercial banks are required to keep certain amount of public deposit as a cash reserve with the central bank and other parties kept with the commercial banks with themselves. As a percentage of cash resources is decided by the central bank only. A certain part of these resources is kept with the central bank for the purpose of granting loans to commercial bank. Therefore, the central bank is also called bankers bank. Custodian of international currency. It is implying that central bank maintain a minimum resource of international currency. What is the purpose of maintaining international currency? This is also on a minimum requirement to what to issuing currency notes. So the Reserve Bank of India, it is maintaining a international currency. The main aim of this resource is to meet emergency also and also requirement of foreign exchange and overcome the adverse requirement of deficit in the balance of payment. There are three most important functions. This is the very important function when they are having the international transaction. This is the most important one. So all the Reserve Bank of India, they are keeping a minimum resource for international currencies. A bank of rediscount. Discounting a bill of exchange, implying acquiring the bill, purchasing it for the sum of less than its face value. Rediscounting implies discounting of bill of exchange that was previously discounted. When owners of bill of exchange are in the need of cash, they approach the commercial bank to discount these bills. If commercial banks are themselves in need of cash, they approach the central bank to rediscount the bills. Lender of last resort. This is also very important functions of uh, Reserve Bank of India. It is refers to most crucial function of central bank is the to lend the money to the commercial bank whenever it is a required time, whenever it is the crisis time. So all the commercial bank, they can approach the RBI and they can avail the facilities of rediscounting of bills and providing a loans facility to the commercial bank. They can sell their treasury bills, government securities, and bill of exchange also. So it leads to the RBI's makes becoming a lender of last resort. Whatever the crisis is coming, they are the leader. They are the lender of last resort. Though they become when there is a problem in a commercial banks, so they come to the rescue for that. A bank of central clearance, settlement, and what transferring of funds. So it is also act as a clearing houses institution, and the mutual indebtedness between the bank is settled. The representative of different banks meet in a clearing houses to settle the interbanking payment. This helps the central bank to know the liquidity state of the commercial bank. For this one, they can able to analyze the liquidity analysis. See if there is a increase the bank rate or not, so they can sell their securities in the open market, or they can purchase the securities in the open market, deciding according to their interbanking payment settlement. For this only they can know their what the recent or present situation of the banking industry. The central bank makes this process easy by setting a clearing houses under it. Controller of credit. Central bank has a power to regulate the credit creation by the commercial bank. All these are directly or indirectly controlled by the central bank. The credit creation depending upon the amount of deposit, cash resources, and rate of interest given by the commercial bank. All these are directly or indirectly controlled by the central bank. For example, the central bank can influence the deposits of commercial bank by performing open market operation and making changes in CRR to control various economic conditions. The next one, it is the development function. It is also very important one. So here in the first one, traditional function, usually all the banks are all over the world, all the banks are doing the same function only. Here in our India, Reserve Bank of India, what are they are doing some developmental functions. So we can going to discuss about what are all the development functions they are doing. Refer to that functions that are related to the promotion of banking system and economic development of the country. Promotion of banking system, it is refers to giving licenses to the what banking industries to open a bank in a reputed areas or remote area. They can giving a license to open up branches. Sometimes in a ATM facilities also they can able to give some condition to open a ATMs in their remote areas. And also so they can privileges to give the preference to the economic development of the country. These are not the compulsory function of the central bank. It is also one of the development functions. Then developing specialized financial institution with the help of the governments. The central bank establishes institution that serves credit requirement of the agriculture sector and other rural businesses also. So I'm giving some two example here. It is long-term banking. It is financial institution. One is IDBA. Another one is NABARD, Industrial Development Bank of India, IDBA, and National Bank for Agriculture and Rural Development. See, in IDBA, it is only meant for industrial development. See, government is giving a full power to given to the IDBA, so they can give the loans and advances to the entrepreneurs or business people. Only a long-term loan. Preferably, these kind of banks also given a loan to the person who are started their business in the remote area or less developed areas only. They can give the loans and advances. Here, the next one, it is the National Bank for Agriculture and Rural Development, NABARD. It is only for agriculture purpose, long-term banking. It is agriculture related business, agriculture related areas. They can providing medium-term and long-term loans. Agriculture related area, that is organic farming, organic food development, and also irrigation facilities, and also some fertilizers development. So these are they are catering this kind of agriculture related, agriculture sector related developments. So these are called a specialized institution as they serve the specific sector of the economy, influencing money market and capital market. So this is the SEBI's control. You know that securities market. Security market also, central banks also helping the security market to stabilizing our economic development or economic growth. Here there are two markets are there. One is money market, deals in short-term credit, and another one is capital market. Money market, it is only treasury bills and government security, the very short term loans, like 3 months period bills and 1 year, within 1 year, so they can having their facility to deal in money market. Like capital market, long term securities, like private sector long term securities and also government sector long term security also dealing in capital market. It is very old one, like an SEBI's what New York capital market, and also Japanese capital market also very reputed and developed capital market. They are the deciding authority. If there is any development in the economy or not, based on this only they can decide that. So here it is a central bank also. They can maintain the country's economic growth by controlling the activities of these markets, collecting a statistical data. Here also gathers and analyzes the data relating to the banking, currency and foreign exchange position of a country. The data is quite helpful for researchers, policymakers and economists. For instance, the Reserve Bank of India publishes a magazine called Reserve Bank of India Bulletin, whose data is useful for formulating different policies and making macro level decisions.